Welcome into a brand new episode of WSI TV. Enjoy the show.
Hello everybody and welcome to another weekly market update after the market closed on the 4th of May 2018. Here's where we look at the overall market, stock market, so we can see, the long-term trend and the short-term trend as it affects our individual trades and our investment portfolios, etc. And we want to try and stay ahead of the game and not just wait for things to happen. So looking at the S&P 500, it's a week-to-week chart going back for a few years now, as you can see, 15, 16, 17, 18. And this each up and down is a week of action, and the action sort of smoothed out by having this moving average here. It's like an average line over the last 40 weeks, and this blue line here. And the average of the last 70 weeks is the red line here. So it's kind of a bellwether sort of line in the sand, as it were. Here's the bull market began with my proprietary indicator that said about early November. That was the start of a brand new bull market, and it has not yet given me the signal to get out, say it's no longer a bull market. But it got ahead of itself early in the year, and it's not quite out of this correction just yet. I mean, as we look at this though, if we just look at the snapshot in time, which is really all I can do week to week, is we see that it's above the 40-week moving average, and the 40-week moving average is pointing up. That is really pretty much, my definition of a bull market. So that's the longer term picture, and let's see the short term picture, see if we can see anything that we're not seeing there with that big picture view. So this is day-to-day action now, zooming in over the last 6 months, and here's that got ahead of itself and then corrected, and then came down, didn't quite correct enough, and then it had a big one here. It looked like it was going to go back up. But then just lately it's just been struggling again. So here's what I do like, first of all, then I'll say what I don't like. What I do like is how much it's repelling off of this 200-day moving average. It looks over the cliff and it doesn't like it, and it goes back. And it did it again this week. There on Thursday it was looking like it was going to close below, but no, buyers came back in. And on Friday, most of all, it came back and touched that 200-day and went up north again. So it definitely doesn't like going below the 200-day. That's a bullish sign. But it doesn't like getting back on track either. You'd have thought by now this is a very long correction. It's been down here a long time. That's a very long time to be in this condition. And it's not. So that the good points are is that it's definitely repelling off its 200. The bad points are this correction has gone on for too long now. More than that though, what I'm seeing here is the selling days are on rising volume a lot of the time, and the buying days, like on Friday, was on lower volume. So that's a bit of an eerie sign, to be honest. We're seeing a lot of what's called distribution days. So it's put me on amber alert not to open any new trades while the big picture says this is a bull market until proven otherwise. The short-term picture is looking increasingly just not that healthy. It's so still very much on an amber light for the short term. It just refuses to go one way or the other. It's very indecisive, but I don't like all the selling days that are going on at all. So that's really where we're at right now, and I will speak to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.